Do you know how to identify a proper market maker seller buy model? Probably not, and that's probably why I clicked on this video. So I'm gonna be in the simplest way possible explaining like the easiest way to spot these. Okay. So in my last video, I talked a lot about how when the market maker model occurs, not necessarily how to spot the market maker model. So in this video, I'm actually going to be going over how to spot it, not as a pattern, but as liquidity, how to use liquidity with these, how the market moves from external to internal and internal to external liquidity. And that's the real science behind spotting an actual market maker buy model and sell model. But just remember, you guys know when they should occur, right? When the expansion occurs should be during the New York kill zone. This is going to be how to spot them. A lot of people think these are hindsight, and these are in some sense, but this hindsight kind of idea of looking for these models actually does help you. So the first things first, right? You're going to need to understand what internal range and external liquidity are. Okay. So internal range and external range liquidity are pretty basic. So if you think about external, it's basically externals on the outside, internals on the inside. So just an example here, an example of external liquidity would be this high because it's on the outside of the range. And then we actually make new external liquidity, okay, right here. So it actually kind of changes here. Okay, this one over here is now invalid because you've already taken it. But if I were to go into replay mode and maybe go right here, this would be the external liquidity. Okay, an example of an internal liquidity would be like an internal range high or low. So for example, this one, you're gonna have a lot more of these. This one, this one. Okay, so it's pretty basic, just internal, just basically highs and lows inside this range. And another example of internal range liquidity would be this one, okay, because it's inside the range and it's also above a fair value gap, okay, and these fair value gaps are actually considered liquidity as well, in some sense, and these are internal range liquidities, and then the external would be here, okay. So typically, a market maker model will typically move from internal range liquidity to external range liquidity. Okay, that's you're not gonna see like in this example here. How I actually identify model is like I said, it's kind of using a little hindsight. Okay, how does using hindsight for a model help me? You're probably confused by that. Well, I wait to see the reaction off this. Right? There's many people who like I could clearly see something like this. So usually market maker models are not external to external liquidity. So what I mean by this is if you go on the daily chart here with BAds turned off, okay, you can see we have taken out external liquidity. See this right here? Now, if we go to lower time frame, like I said before, we took out this external liquidity. Well, the market moved from external to external. Usually it does not, okay? It will usually not move from external to external. If we were to get a market maker model here, we usually would go up, take out some high, and then move back to the low, okay? So in this example, this would be this black line is external liquidity, this black line is external liquidity. Okay, usually you're not going to see that. Okay, but does that always mean we're not going to go from external to external? No. It's just not as high probability. So what you're trying to look for, your job to look for these models is this. Okay, if I'm gonna just pull up a quick little graphic, okay, just so you guys can see like the pattern kind of part. Cause someone commented on my last video on the video I did about time. I've already explained like when market maker models, when a lot of the accumulation and distribution happens. We know from my last video those happen in the New York kill zone. Okay, typically, but typically like the pattern you're looking for is this. But this pattern means nothing without internal or external liquidity. And I've done a video on this before, but I'm making an updated video on this again. So this pattern does nothing without understanding internal and external liquidity, exactly what I went over before, all right? Now, when you understand liquidity, that's where you're going to get your model. So by the hindsight thing I was talking about, I'm like, okay, well, if I'm in live time, right, and I see a dump like this, I'm not really trying to guess if we're going to bounce out of this or not. I'm just waiting. And as we know, this is our internal range liquidity. So I'm just kind of waiting. Will we bounce out of this or not? Okay, so I'm just kind of sitting there waiting. And we come into it. We come into it about 1 o'clock. Okay. And then we start bouncing. Okay. Market closes. Okay. And I love telling people like last 30 minutes a day, I will not take a trade. I'll just kind of look for reactions, and I will not form a bias until I wake up the next morning, because I want to see how overnight reacts to this, blah blah blah. So when I wake up the next morning, okay, you can see here's midnight, here's London. I'm waking up the next morning and I see this. I'm like, well, we got an overnight pump off of this, and this is where the hindsight part comes in. This is where I am now understanding that the market has moved to this internal range liquidity. We reacted off of it. We expanded off of it. This is key. And now I know when I wake up the next morning, whenever I get on the chart, maybe it's like usually it's about 8:30, so right here, I can have a strong sense of, okay, the market is delivering from external liquidity or internal liquidity. It's a fair value gap. It's likely going to go to external liquidity now, and this will be your external liquidity. So before, well, we didn't know, okay, is the market going to hit this low, or are we going to bounce off the surveillance gap? Well, we don't know. We want to see the reaction off this. We want to see expansion off this. And that's when you can hop on a setup later in the day, right? This setup actually occurred during Asia, so I'm assuming you wouldn't take this. But when we go into the New York session, you're looking for your model, okay? So I'm looking for some sort of inversion or something like that. And we get a little better one in ES. This one in NQ isn't as clean, but we get a little inversion here. And it holds the lows not taken out. There was an SMT here. Okay, and you can see the market moving from this internal range liquidity, and then it eventually moves up to this external range liquidity. So I'm sharing a PDF with you guys in the description below. So click that link. It's going to have the keynotes, and it's also going to have this chart. And the other thing I want to say about this chart is, see how the market here moves from internal range to external? Okay, the market can move from internal to external or external to internal. We actually see the market move from external to internal here in this example. Okay, so if we look closely, we had buy side right here. This was external liquidity. Okay, so this was external. And the market does move from external to internal. Okay, look right here. See how the market moves from here? We hit this external. We move to the internal range for value gap right here. And then again up here. We've taken out this external. Where does the market go back down to? This internal range liquidity, this low right here inside this value gap. So see how it moves from external to internal here, and then from internal back to external here. That's how the market moves. And you can see when did the majority of these moves and expansion moves occur? During the New York session. Okay, this was during the New York session. It was the afternoon session. This right here is during the afternoon New York session right here. Okay, but a lot of these moves you're going to see occur during the New York session, and then same thing with this. This occurs during the New York session as well. So from external to internal, back from internal to external here. Okay, so now that we've hit external range liquidity, here comes the hindsight again. Here comes the hindsight part again. I know if the market moves from external to internal liquidity from market maker model, I'm just waiting for the reaction off this. If I see a reaction off this of high, well, where should the market probably head to? Well, it should probably head to external to internal. Well, where are the highs, or where are the lows that made the highs? Well, we got this low here that made the new high here. And then the low before that is right here. There's no other swing lows in this whole leg besides this one and this one. Okay, so you can clearly see there's a swing low here, swing low here. So once we hit this external, in hindsight, if we see in live time, if we do not react to this nicely, we know that's going to be a short setup, because, again, a market maker is external to internal liquidity. And a lot of people say, like, they're like, this is hindsight. You don't know if we're going to reject this or not. Well, you do, right? When I'm looking at the market now, I know, oh, we barely displaced for this. Now is the time to look for some sort of retracement and a short, okay? When I'm right here, I don't know if we're going to displace over or not. Like, I don't know. I'm just waiting to see if we do. And if we displace over and get a model, that's when I become interested. I'm not just going to guess if we're going to displace over this or not, right? I want to see a reaction off this. This really low reaction here is like, okay, now that tells me we're probably going to go back to all the internal liquidity, right? Because we hit an external here. So the next internal would be here, here, and here. And at that point, it's just depending on, like, okay, are we going to displace back to these? If we displace to this, we should hit this, blah, blah, blah. Okay, but you can see the market will hit this external and then go back to these little internal ranges in here. Okay, and this did reject for a nice short setup, okay? Right there. So you can see you're not going to know if this is going to displace over in live time. Like, this is the reaction part. This is where you have to react live time. You're not just going to see, I mean, most of the time ICT is not going to try to predict 3 legs down the road. He's going to try to be focusing on the leg we're on or the next leg. He's not going to try to be predicting 3 legs down the road. So this is just a key example. And you can see we go all the way back. And what actually happens here is we created a SMT with ES. So ES did hit its low. You can see here on like the 15-minute chart. Okay. ES failed to hit its high. We got a bearish SMT here. And then ES hit its low first. So that's why what ends up happening here is NQ never hits its low because ES does. Okay, that's just a bullish SMT, and that's just going to happen sometimes. But again, the idea of, okay, here's external liquidity. Once we hit that external, if we get a reaction off this or some sort of reaction, we're going to get a sell model. Okay, so one more example. Okay, I'm going to start with a higher time frame. I'm going to look for some sort of hourly fair value gap reaction. Okay, some sort of hourly fair value gap reaction. And that's going to give us our model. Okay, so I'm going to go right here. Okay, so we have a bearish fair value gap here. All right, we have a bearish fair value gap here. We kind of have a little relative equal lows here. And here is like, okay, I'm wanting to see the reaction because this is our internal liquidity. Okay, this is your internal range liquidity. People call IRL. Now, I'm not going to say like, oh, we're going to reject this. I'm not trying to be the hero and try to say we're going to reject this ahead of time. I need to see some sort of model out of this. Okay, you don't really get like a decent model here, the greatest. And the problem with this is, again, I prefer when we get the dump during a New York kill zone. This is not the New York kill zone. This is the actually PM session. So this is not the New York AM. I always prefer the New York AM, like I said last video. This is actually the New York PM. So again, I know you're probably wondering why doesn't this work? I mean, probably just because of time, if I had to say so myself, but not a bad setup. If I took a loss in this setup, probably would not regret it, but just because of the time, I don't really prefer this time. So let's just keep playing. You're probably going to see price chop around here because it's getting into overnight. And then here's the part where I wake up in the morning. Okay, so I wake up in the morning and I'm like, okay, I woke up. Do I see a reaction off this hourly fair value gap? Yes, I do. Do I see a reaction off this internal liquidity? Yes, I do. So if we see a reaction off this internal liquidity, where should the market head to next? Okay, it should head to external range liquidity because we know the market moves from IRL to ERL, and we know the market moves from ERL to IRL. Okay, and because we're rejecting off of IRL here, it should move to the ERL here. Okay, so do you understand that? So I'm not trying to be the hero and guessing, oh, we're going to reject this. I'm just waiting for a reaction on this. So I wake up whenever I wake up at 8 o'clock or 9 o'clock, and I'm like, oh, well, I see the market rejected this, right? I know the market rejected internal liquidity. I now know the market's probably going to head to external range liquidity here. So this is when I look for some sort of inversion model. And the key time for a market model to form, just like I talked about in my last video, is during the New York kill zone. So I'm really waiting for the New York kill zone here. And then I'm looking for some sort of inversion setup, all right? And you can see the New York kill zone session starts at 8:30 here. And it actually does not give an entry. Okay, but here's the 8:30 candle. Here's your entry. Okay, you never actually gave us one. And I did actually alert this play in my Discord, I remember. I took a short off of this. So we closed under here, and I remember I shorted because I was like, okay, we closed under here. The market's reacting from internal range liquidity. We have to go to the external now. Okay, and I remember taking a short here. So again, you can see like, again, internal to external and then external to internal. So now like if we react off of this, which is external, well, where does the market have to go back to? Internal. So now I'm just looking for some sort of market structure shift here. Okay, just normal structure. I'm looking for some sort of market structure shift here, whether it be a low or high, and then break that. And then I know we have to go back to internal range, which would be like right here. Okay, so let's see if we get anything. Okay, right there. So this is actually not a market structure shift, but it's actually a BPR. So this is something that's like, okay, now I have a BPR that can identify as a market structure shift. Now I know the market has to at least go back to this high. Now, it's gonna all click. Like if you guys made it to this end of this video, again, this is just what I'm about to say here is should hopefully click with you. Okay. By the way, if you didn't make it here, comment one of your weaknesses. Look what time this is. This is 3:30. In my last video, I talked about how the market maker model always or usually occurs during the New York AM session. Is it the New York AM session? No. So do I expect this to be ran right now? No. This is just not a good long, right? It's just not a good long. I don't expect to be ran because of the time. We need to wait to see, will we consolidate and then will we react to here when New York time zone comes? Okay, so let's see what happens. Here's the overnight. Here's our bad price action because the market does not want to expand here. It's not the New York kill zone. This is Asia. We typically can consolidate. We're waiting for the New York. So here's the New York kill zone right here. This is it right here. So now we finally came to the New York kill zone. That's when the market's likely to expand to this next high because now it's a market maker buy model. So this is the 8:30 time. This is when you're going to see a fair value gap like this work, and then we're just going to go right to the high, okay? So if you look, you can see boom right there. See how time waits to hit this like high? You're not going to see the market, rarely you're going to see the market expand if it's not the right time. Right? If this was a New York AM kill zone, this would have expanded right here. This very value gap would have worked, but this was too late in the day and the market had closed and it's just not the kill zone. So again, you're going to see how time and price tie together here. The market kind of waits a little bit, and then finally when the New York kill zone opens, you get this fair value gap. And this would have worked probably if I had to guess. It might have been an hourly fair value gap. I don't know. But again, you can just see clear example of how that works. So hope you guys enjoy this video. Make sure to use my code Dodgy for free or for Apex account. Again, there's 70% off discount right now. Hope you guys this video helped you. Again, I'm gonna go over. I'm probably gonna make another video on this, but again, it's just very simple. External liquidity to internal liquidity. Okay, so we got external liquidity grab here. Where do we move back down to? Internal liquidity right here. Okay, so this is how you're gonna find your model. So again, just remember that visual I just pointed out. And yeah, that's it for today's video. I did, by the way, I did make like a free email list, so if you want to sign up for that, link in the description. And then yeah, that's about it for today. So appreciate you guys watching this video. Everyone enjoy your day. Don't forget to comment one weakness you have, and yeah, peace.